Hey there, Trades and Gains fam. This is Max Pitts. We're back with another episode of our market recap. Today we have some updates for the last week of Q2 in 2024. As we approach the end of the first half of the year, the market is starting to taper down. Let's dive straight into our indexes and see how they performed today. The S&P 500 shed around 0.3%. The Nasdaq Composite fell more than 1%, while the Dow Jones Industrial Average jumped up 0.7% as investors moved their money into the energy sector. On the macroeconomic front, the Personal Consumption Expenditures Index is coming out Friday morning, which contains the core PCE measure, a strong indicator for the Federal Reserve. The street is expecting PCE to rise only 0.1%, which would be the slowest monthly rise since last November. If expectations are met, this would add to a series of positive data prints that could ease Fed policymakers' concerns about rate cuts this year. Traders are currently banking on a September rate cut, according to the CME FedWatch tool. Diving into our retail side, let's talk about Nvidia. The chip heavyweight stock price took a significant hit in today's trading session, falling over 6% to close at $118.11 per share. This marks the third consecutive day of losses for Nvidia, with the stock declining more than 12% from its all-time closing high of $135.58 last Tuesday. Analysts are divided on whether the recent sell-off signals long-term concerns with the stock. Bank of America analysts have reiterated a buy rating and a $150 price target, calling Nvidia a top pick and stating that any volatility is likely to be short-lived. On the other side of this coin, however, Jefferies analysts have maintained a buy rating and raised their price target to 150 from 135, calling Nvidia king and kingmaker. However, Patrick Moorhead, founder and CEO of More Insights and Strategy, has cautioned investors to be watchful for signs that the pullback may be more than just a temporary correction. To continue on with our tech news, Apple's legal troubles just got a whole lot worse. On Monday, European Union regulators announced that the tech giant had violated the Digital Markets Act, a new law designed to rein in the power of tech giants like Apple. According to the EU's European Commission, Apple's App Store rules illegally blocked software developers from telling customers how to access content outside the App Store. This is a clear violation of DMA, which aims to prevent dominant tech companies from stiffing competition. If Apple is found guilty, it could face fines up to 10% of its global annual revenue, which has reached a staggering $383 billion in 2023. That's a potential fine of $38.3 billion. Additionally, the EU has opened a separate investigation into Apple's practice of charging a core technology fee for iOS apps available in the EU. However, Apple is not going down without a fight, claiming that it has made changes to comply with the new EU law and is confident that its plan complies with the law. The company also estimates that over 99% of developers would pay the same or less in fees under its new business terms. This is just the latest in a series of legal headaches for Apple. The company is already facing antitrust charges from the U.S. Justice Department and 16 state attorney generals, who allege that Apple used illegal tactics to maintain its monopoly in the smartphone market. Despite the news, however, Apple stock actually rose over 1% in today's trading session. It seems investors are shrugging off the legal woes, at least for now. And that's our episode for today, folks. I hope you enjoyed it. I hope you liked it. If you did, go ahead and subscribe so you can stay up to date with the latest and greatest news in the stock market.